Mike Johnson, the Speaker of the House of Representatives, said they are likely to get rid of the EV tax credit, the $7,500 tax credit that makes it a little bit cheaper to buy an electric vehicle. Now, this is huge news, in part because we may get rid of the EV tax credit, and they may also impact EV credits or regulatory credits that companies like Rivian and Tesla are using to actually generate reasonable money on their vehicles. Without those credits, Tesla wouldn't have been profitable last quarter. Rivian thinks it will get closer to free cash flow break even from their operations, but that's only if those credits continue. So I'm going to go through exactly what we know today and what the potential impact would be on those two companies in particular. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. Thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the news that we got today. This is from the Financial Post. The U.S. House is likely to kill the EV tax credit. Now, there are a number of reasons this could potentially happen, a lot of them political, but one of them is if they're going to pass some sort of reconciliation bill, they're going to have to increase revenue somehow by reducing tax credits, and this would be one of the ones that would be relatively easy, I think, to pass through the current Congress. So this is a huge risk for EV investors. There's also been talk that the federal government could preempt some of the regulatory credits that states like California have put in place. That's become really costly to a lot of legacy automakers, but it's been the benefit of companies like Rivian and Tesla. So let's go through what the numbers look like. I'll start with Tesla. They don't break out the different countries where they're operating. So we don't actually know specifically from Tesla how many vehicles are being delivered in the US versus China versus Europe. We also don't know how many of these regulatory credits are coming from different countries as well, because Europe is going to play a role in this. But in 2024, the company generated $2.8 billion in regulatory credits. And in the first quarter, that was $595 million in regulatory credits. Let's go with that $595 million number and then just divide that by the total deliveries. That was 336,681 in the quarter. So that was about $1,800 worth of regulatory credits per vehicle for Tesla. On top of that, they're going to get the $7,500 tax credit for basically all of their vehicles. There's only a few vehicles that they sell that would potentially be over the $75,000 or the $80,000 number that no longer qualifies for that tax credit. So you add those two together and you're going to get about a $9,000 impact on each vehicle. Now, keep in mind, Tesla's sales and deliveries have been falling in part because they have less demand for their vehicles. They have lowered their prices for basically every single one of their models, especially the Model Y and the Model 3. Those are their highest selling vehicles, and they've dramatically lowered those prices over the past 2 to 3 years. Despite those cost reductions, sales continue to drop. So this is a price-sensitive market. That's one of the things that I think a lot of investors didn't think a couple of years ago. They thought Tesla could basically charge whatever they want because they maybe even have a appreciating asset in a Tesla vehicle. But that is not the case. And if we have a $9,000 reduction in the value of those vehicles, so basically a $9,000 price increase, that is going to have another dramatic impact on their sales. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Let's go over to Rivian. Rivian is a little bit different. They don't sell nearly as many vehicles, only about 51,000 vehicles in 2024. They're going to do about the same this year. But they said that last year, total revenue from the sale of regulatory credits was $299 million for the fourth quarter. This is the fourth quarter report, and $325 million for the fiscal year of 2024. So again, when you go back and look at Rivian's fourth quarter numbers, always keep in mind that they basically held these credits until the fourth quarter to artificially improve their fourth quarter numbers. That's just what they said that they were going to do, and that's exactly what they did. But that also means that they have about a $6,000 impact per vehicle in 2024 from regulatory credits. That's on top of the $7,500 that they would get, at least for the vehicles that qualify. Again, they're going to be hitting more of that $80,000 cap. But all of R2 and R3, so if you're bullish on Rivian, you are bullish on the idea that they're going to sell a lot of R2 and R3 vehicles. Those vehicles are going to be at least $7,500 more expensive if they get rid of this tax credit. Potentially many $1,000s more than that based on the revenue that they generated in 2024 from regulatory credits. So here's the real problem. Both of these companies are having problems with demand. Tesla, I have documented this many times on this channel. Their demand is dropping, their prices are dropping, And then their margins continue to fall as well. Without those regulatory credits, they would have lost money in the first quarter. You can see that in the first quarter, free cash flow from operations, $664 million, net income attributed to shareholders was only $409 million. So they would have lost money on a net income basis without those tax credits, would have almost been to free cash flow negative. That's not even including the potential impact of the EV tax credit going away. That's $7,500 per vehicle sold in the US. And you're talking about hundreds of thousands of vehicles being sold each year in the US. So this could have a dramatic impact on Tesla's business, potentially mean that they're going to lose money on every vehicle that they sell because, again, they are in a price-sensitive market. Rivian, the numbers are even worse. Rivian is losing thousands of dollars on every vehicle that they sell. They haven't even gotten to sustainable gross profit positive, meaning that they can just make a vehicle and sell it for the cost that it actually takes to make that vehicle, much less cover about $3 to $4 billion worth of operating expenses. They're nowhere near close to doing that. They also need to get to the point where they can build their Georgia facility. They are reliant on a $6+ billion loan from the US government. Again, that's coming from the Trump administration. They are reliant on that closing to be able to get to free cash flow positive. They're not going to be able to do that in Normal, Illinois. They just don't have the capacity with 215,000 units of capacity and the debt that they already have on the balance sheet. They have to get Georgia operating. And now we have this question, even when they do get Georgia operating towards the end of this decade, is that going to be profitable if we don't have a $7,500 tax credit? Remember, this policy would likely be in place for at least the next 4 years. So at least through the end of 2028 into 2029. I think this is huge news. Now, neither of these stocks are really reacting all that much. And I think that's really surprising because this could potentially blow a huge hole in their economics, not only in their income statement, but also in their balance sheet. Because remember, Rivian has a very weak balance sheet right now. Wouldn't be surprised if they have to go raise capital by selling stock sometime later this year. Tesla has been in a pretty rough position over the past couple of years. They do have plenty of cash on the balance sheet, but it also takes a lot of cash to invest in everything that they're building, with building out their Optimus robot, with FSD. They said that they're going to own those initial vehicles early on and potentially burning money from their operations. So this is not getting a lot of news, but I think it should, because if this ultimately ends up passing, I think this is going to be devastating for investors in every single EV stock out there. But let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.